Okay, advanced accumulation. Well, I think advanced accumulation is pretty, so basically pay attention to what timeframes are hard closing, says TL. I say pay attention to what could possibly be happening next. So if you're in the moment and you're trading and you're looking at your timestamp and you're noticing, like in this moment, oh, we're testing trend and it's 7 o'clock. Oh, if we open above trend, nothing changes. Okay, so it's 7 o'clock right here, for example. This is 7 o'clock. If we hold trend, nothing changes. We're still above it. But in a 1 minute candle, we could possibly be dumping, and this could possibly be opening below trend, and it's the first minute it can happen, right? So there's an effect that could happen, right? So I think that's the key, is that you have to see what could potentially happen if scenario A happens. What can it cause on scenario B, right? So I think that's very powerful when it comes to time. It's I'm looking at timeframes and I'm thinking, okay, how can this change the chart in the next 5 minutes? What is going to happen on this 5 minute close? How does it affect the 15 minute? Are we leading up to an hourly that's trying to close a 4 hour? Are we 3 hours away from the 4 hour? Are we 10 minutes away from the 4 hour? If this were to lose level X and we're 10 minutes away from a 4 hour candle, could that 4 hour candle potentially open a hard close by losing its level, right? So it's what could possibly happen. We'll give you a lot of information. Advanced accumulation. So advanced accumulation is very much talking about cycles again. Oops. Advanced accumulation is very much seeing that those cycles, they do exist, right? Like your 1, 2, 3, 4, 5, this exists on all time frames, right? Like even here you have, and I'm just picking a completely random spot on the chart. I don't even know where I am on this chart. I'm just picking a random daily level. That's fine. Even these, you talk about advanced accumulation, advanced distribution. These very clearly give you points where you are breaking moves, right? Like you can see where you're hard closing from accumulation candle to accumulation candle to accumulation candle. So you can see that hard closing happening all the time. So advanced accumulation is simply just understanding that cycles are going to further break your move as you continue breaking cycles. The whole thing about any cycle, whether it's distribution or accumulation cycles, is that if they continue to break trends, okay, I want you to think about this for a second. If a cycle continues to break its trends, okay, so you start in this moment here, right? You start in this moment here, and you've broken this trend, right? So you've broken one trend, you've broken a second trend off of this point, you've broken a third trend off of this point, you've broken a fourth trend. The more trends you break, the more trends you break in a smaller time frame, eventually that will bring you to a larger trend somewhere else that you're breaking. Now, I don't know where this larger trend is in this moment because I simply just kind of picked a random spot. But the more trends on a small time frame you break, the closer you're getting to breaking bigger trends. So that's really important to understand, is that as you're breaking trends, as you're in an accumulation cycle, you have to say, okay, what is this accumulation cycle doing? So basically, if you're holding a hold level, right, you are eventually going to break a trend. And by breaking that trend, you are eventually, by creating a cycle like this, you are eventually, by cycling through these smaller trends, you are eventually going to come to a larger trend that will break. So that's really important to understand about cycles, is the longer a cycle exists, the closer it's getting to breaking a bigger trend. So you may be breaking some trend that has, I don't know, what is this, from October 26th. Sure, sounds good. From October 26th all the way down to January. Great. The longer you hold this thing, the bigger the trend you're going after. There may be some super trend out here, right? Like this. Now, I don't know. I'm just drawing a random spot. Oh, wow. Looks pretty accurate, actually. Not bad. Let's just attach to the accumulation candle. Maybe I did good here. You have to realize that as you're cycling smaller time frames, a smaller time frame is cycling against the beginning of the next cycle. So you can almost see this as independent cycles. Like this would be one cycle, and this is like we can call this like a micro cycle. This would be a larger cycle. So this 1, 2, 3, 4, 5 that exists in here is continuously setting up the break of the larger cycle over here. So this 1, 2, 3, 4, 5 is just basically going after this one right here, which has its own 2, 3, 4, 5, right? So that's really the important thing to understand about cycles, is that the longer they hold, eventually they will get to a larger cycle, which is kind of common sense in a way, but again, not really, because nothing should be assumed as common sense, because there's very specific rules that exist on these charts, right? So there's very specific rules. But yeah, advanced accumulation, that's what it is. And that leads us right into number 4 here, which is break and hold levels. So this is going to be a fun one. So break and hold levels have a very great interaction with cycles as well. And you know, we're going to stick with this example right here. Um, so we start cycling, right? You start cycling against, and everybody knows how a cycle works. You end up dropping to hit a hold level, so that creates your one, which breaks your first trend, right? You hit a hold level, which would be right here. I'm sure this hit a hold level from the past somewhere. Um, this hits its hold level. This acts to break this cycle, which is the number two, right? So um, that's fine. Everybody knows that, and then that creates your next cycle point, which would be right here, there to here. So you've got this right here. Realize that this is going to be holding off of a hold level, right? So it's going to have its own hold level in creating a ladder. So we're probably tackling a few lessons right now. We're probably tackling advanced hold levels, advanced break levels, break and holds, and identifying perfect levels. We're probably going to tackle all these four in one, because I'm going to kind of just continue to talk, right? So you do have this hold level that's trying to break trend. So you can see that moment, that moment of time where you understand what's breaking on either side, whether you're continuing your trend in one direction, or whether the level is holding. Really, the key information here is you are trying to create a cycle, and it is going to hold off of a hold level somewhere, right? So come here, and you actually lose the move, which is fine. So that's actually um, right here is the first part of your cycle, right? So then you would have its own hold level, something like this and this, right? You'd have different hold levels here. You'd have this one here, this two candle valley right here, which is fine. It actually holds this move up completely and creates its own cycle, right? So right there, the first pullback. So this creates its next cycle. So really, like, you know, the important thing about hold levels is that you're going to have cycles that are created. These cycles will have hold levels that verify the cycle is accumulation. Like right here, you could have seen here's a hold level. We did break our first part of the cycle. So this would have been the one down here to break this trend right here, which is the two, which gives you your three swing high right here. So at first, you would have actually been like this, like that. So this would have kind of been the first confirmation point, right? Like you have, delete these, 1, 2, 3. This one doesn't exist yet. And as long as you can use this hold level to break through the three, you're creating your ladder, which is confirming your cycle. So you have your 1, 2, 3 created here. Like this is your three right here that's created. This is not part of the cycle. This just confirms that you could possibly be cycling. So this is the one down here. The two was that line that we just broke. And this three here is the first part of the cycle. Now that gives you your next point in the cycle, which is simply will have its own hold level, something like this, right? I don't know. We're just mark this level here. This will have its own hold level, or it will hold the move back from the past, or even go after a different range, like right here, right? So that's fine. It goes after that hold level. It's already created its 1, 2, 3, breaks its move. But really, the important thing to know here is like you're going to have these hold levels that will attempt to hold up the move through cycles, right? Even here, you would have had this part of the cycle like this, and you break over this, and you have a move up, right? You can see it's struggling, and then it has its move up. Really, quite simply, just holds its hold level, hits its advance, or like as you advance through the cycle of the move, you have these hold levels, right? Like you can see the hold level here. It's the valley right here. You have this hold level of the move. You have the cycle of the trend, and you simply break over top of it off of the hold level. Like this is cycling 101. Like this is, you know, I don't care what side of the chart you're on distribution. It's the same thing. It's just inversing the move, right? You're on the same thing, except you'd be using distribution candles, which is perfectly fine. That's all. It's all the same there. And then you simply fall through the move, right? And create your next trend, right? Like this. So then you'd have this here, which actually ends up being this guy right here, and let that move play out a bit. And when you break over that, you're simply in the next part of the move, right? So and then this would have been the hold level back here for this one, right? You can see that attempts to hold. It can't. It probably goes after a smaller time frame hold right here, which is fine. And essentially, this is going to be the bigger hold, and this is like just a smaller time frame, probably like a 4 hour or something like that. We can even look at that. Yeah, so that's a 4 hour hold level right there. So you guys can see the hold level right there, perfectly fine. Exactly kind of what you would expect. One daily candle probably represents a marquee of 4 hour candles if it's that big of a distribution candle. Yeah, just experience shows you that, right? So then you just flip the chart over, and you can see how this thing is cycling, right? You can see how this thing is cycling, a breakout of the move, and then, you know, at this point it's much gone, and it's likely hitting the same hold level that this did from back here. So whatever this hold level was back here that it hit, maybe here on a smaller time frame, I'm not really sure. I'd have to go break it down, but looks like something like this. It's hitting that same hold level against distribution. So then, you know, once it kind of loses this, the move is dead, right? So let's just see what happens here. So once it loses this, the move is dead, right? So you can see exactly what happened here. Very, very straightforward cycles, right? Hold levels and cycles, how they work as an interaction together. So yeah, again, like I said, like once you lose this, the move should theoretically be dead, right? Because it's just simply hitting its own hold levels back here, hitting that hold level, and so forth and so forth, right? You can see the hold level back there. Very quite simply, it's the way cycles and hold levels work together to create a piece of the chart that is very hard to explain, right? People don't really understand how to see a move dumping. Well, there's actually a very specific way. It's just that you have to understand these pieces working together, and you could even take this back to here, and I'm sure you would have. Probably can't. I don't think I'm going to maybe even be able to see the 5-minute here. I can, which is fantastic. You can simply see where this trend gets hit right here. Loses its trend, back confirms it, and then just falls off a cliff. Like you've got from 9 in the morning till 11 in 2 hours. How much did Bitcoin lose? 6%, and this was just the start, right? Yeah, maybe we won't do a 5-minute candle. Maybe we'll do an hourly candle here, where we were on this side over here. So that's just the start, and then it kind of comes up and back confirms it again, and yeah, and ends up losing its level. And I wonder if I even marked this trend properly. It looks like it's a little bit off. Did I just move through this thing too fast? I did. I think I just moved through it too fast. It actually has to be to the proper part of the move. I just simply moved through it too fast, which is okay. So let's go back to here. Maybe we'll start with the hour. Use a replayer tool. Might get me there a little quicker. Yeah, okay, we'll go right here. We don't need this one here anymore. That's kind of useless information to us. Even in this part of the move, you would have had a hold level here that if once this breaks, it's kind of just losing the move. So yeah, and then you hit this hold here, and I'm sure that you fall through it like a hot knife, right? Like, yeah, you just fall through it like a hot knife, and you just continue to hit these hold levels and fall down against the move. So this is actually very straightforward in a way. I think the really important thing here is that understanding holds and breaks, hold levels have a very specific interaction with trends, and they create cycles, right? So your hold levels create points that will confirm the attack of a cycle. Okay. The attack of a cycle will continue to attack larger pieces of its cycle as long as hold levels can hold. And if hold levels can't hold, that means breaks are being hit. Now, breaks are being hit. Hey everyone, how's it going? As you know, I'm now giving out some of this content for free that I was otherwise charging for the past little while. Yeah, drop a donation, subscribe to the channel, join Patreon. You'll get access to Discord. Great way. Lots of top level traders in there, people who are doing this for a career every single day. So go to Patreon, join a tier, get access to Discord. Go on Reddit, talk about future of trading, talk about the science of trading, talk about cotton candy, socials, everything you can. Let's help this thing grow. It's the way you guys can thank me for giving out this content for free that I was otherwise charging money for. So I'll leave a Bitcoin address on the screen. I'll leave the Patreon address on the screen. Just do something to help out. Okay, thanks guys. Take care.